Hi, I'm Nancy Jacqueline. I'm now teaching at SAIS. Since you've said that you want to strengthen the IMF's role in multilateral surveillance, I wonder if you have a view whether the Financial Stability Forum may have outlived its usefulness and in fact be serving as an impediment to the IMF playing a role within its legal charter and its legal framework to promote stability in the financial system.
Keeping in mind that his governor is chairman.
Yeah.
I also assumed that it was a little bit like Nixon to China. He could think of another important role for Mario.
No, I think I'm not employed by the Financial Stability Forum, so I can. I think in this field I tend to be more pragmatic than you seem to assume, because frankly I think that this is a very complicated field, and all good, willing people and fora can provide some positive contribution. I certainly would want to avoid some sort of an ideological conflict of competence between the IMF and the Financial Stability Forum. I think the Financial Stability Forum is a body that was invented at the end of the 90s by Hans Stittmeyer, and it was in a way to rebalance a little bit the emphasis which I mentioned earlier that was excessively put on the emerging market countries. So the idea was that, okay, let's look also the vulnerabilities and the weaknesses of the financial system of the big industrial countries. So from that point of view, I think it was a good idea, which has not produced the expected results. But I think at this stage there is, in my view, no doubt that there is a complementary effort underway. I think there are certain meetings in which the IMF is on the chair. There are other meetings in which the IMF is a member of the committee and so forth. But the importance is that the two can work together with this objective of strengthening the surveillance by the international community. And I think that the decision to enlarge the Financial Stability Forum is a good one. I think there is certain concern among the regulatory family of various national institutions that regulation is a highly delicate function and should remain performed within a group where the regulators are directly represented rather than through the intermediation of the executive directors of the IMF, So I think, as I said, these are all good intentions, and I would welcome, some sort of more emphasis on working together than on fighting for turf and sphere of competence.
Fabrizio, let me ask you a somewhat related, but I think different global governance question. You just mentioned Financial Stability Forum is in the process of enlarging its membership,
yeah,
and a number of emerging markets that have not heretofore been in the group will be brought in. Likewise, we may be in a period where the G20, coming off the summit last month, may be supplanting, or at least moving up alongside, the G7 as the key steering committee for global economic affairs. Tell us what you think those governance changes would mean for substance. Suppose the emerging market countries do come to be more active and full members of the Financial Stability Forum. Suppose the G20 does largely replace the G7 as the key forum for talking about governance of the world economy. The net effect of that, of course, would be for 6 to 8 key emerging market countries to be in the central institutional decision-making location, which they have never been before. Suppose that happens. What substantive changes would you suppose might occur, including, importantly, on the issues you were talking about as needing systemic reform?
Well, I mean, I think these are very complicated issues. Again, I think that there has been a lot of cooperation at the level of central banks and regulatory bodies already in the BAL committee. I mean, the BAL committee is a body that goes far beyond the G7 and even a G20. You know, it has a wide representation. So from that point of view, I think it will not be so much of a difference, you know, for the regulators and the central banks of these countries, but certainly it will make a difference for their prime ministers, head of governments, or for their financial ministers, you know, because they have not indeed participated in this kind of fora before. But I think, you know, it is something that has again to be addressed in a pragmatic spirit. You know, there is obviously an evolution underway. I don't think we have reached, you know, the sort of a stable equilibrium. I would consider that the enlargement of the of the forum for negotiation, you know, from the G7 to the G20 is certainly a positive thing. I don't think it needs to be sort of marking the end of the G7 in the sense that, in my view, it has always been essential for the countries that represent, you know, the traditional body of the Western cooperation, I mean, including in Japan among the Western, you know, it depends on which angle you look at the world. You know? But I think, you know, the body of this group has always been very important, not so much as a directorate of the world economy, because this was, I think, always a little bit of a fantasy invented by journalists. But I think that there is a need, perhaps, of an instance in which the traditional North American, European, and the Far Eastern, you know, democracies get together in order to determine what positions they would want to assume in this broader fora of negotiation. So I think you know, we are probably going to be in a state of flux for some time. And there might be overlapping fora and conflicting languages coming out of various communiques, you know. But again, I think there is also the need to accept the fact that certain decisions that may be taken by a small group of countries have to be, in a sense, accepted by broader political fora. Otherwise, they will never be implemented. So I think, again, we have to be prepared for a rather complex process which may be conducted in different layers, in different groupings, you know. But as I said, you know, I'm surprised by the sort of the consensus that has been developed within the G20, and we will have to see if the new American administration, I hope so, will fully endorse the certain objectives and indications that have been indicated in the G20 declaration, because, you know, one could have expected a much more divided approach, you know, as a first opportunity in which these countries have gathered together at the level of prime ministers or head of states, you know, to hear the consensus on free trade, on on reforming the financial system without destroying globalization or bringing back the clock. I think these are important achievements, and you know, as I said, you know, then we need to strengthen also the institutional framework in which all this will have to be managed, you know, but I think, you know, we have to be pragmatic.
Just in terms of what to expect from the new Obama administration, I think it's worth recalling that the two top economic officials of the incoming Obama administration were the people who invented the idea of the G20. Yeah. So I think we can expect them to be very supportive of that idea and, in fact, push down that road. Okay, we have a number of questions, one right here, and then back, and then John. Please identify yourself and fire away.
My name is Daniel Serwer. I'm Vice President at the U.S. Institute of Peace, but I'm here purely in the capacity of friend of Fabrizio Saccomanni. Fabrizio is too polite to say so, but if I hear him correctly, he's saying that the United States is among the problems in the world today. There's a lot happening right now in the U.S. We're investing enormous amounts of money in banks, loaning enormous amounts of money to car companies. The question on my mind is, you're a very keen America watcher. Are we headed in the right direction? I mean, if I understand you correctly, what you'd like to see us do is have a single regulatory scheme for our financial institutions. Do you see emerging from all of this confusion what you would like to see, or and if not, what should the new administration do to push us in the right direction?
Well, I think, as Fred said, you know, the new administration, I think, has a lot of good people in the right place. You know, I mean, in my book, I have strong words of admiration for Paul Volcker, and also I think I quote an article that Larry Summers wrote at the end of 2006, in which he said, look, you know, don't trust this what we call in Italian bonaccia, when, you know, calm sea with no winds. You know, this is, you know, a crisis can come up any moment, and particularly when pricing of risk and volatilities are so low, then this is the time to fear the worst, you know. Tim Geithner, you know, he was working here at the fund for some time, and I've been, you know, fortunate enough to see him as a colleague in the board of the Bank for International Settlement. He's a very, very capable and sensible person who knows what the international monetary and financial system is, you know, and I think that would make a lot of difference from the attitude of the current administration, was been very much aligned with what I called, you know, the sort of, you know, the house in order approach, you know, and then you know, omitting then, you know, to say whose house, you know, are we have to look at, you know, to see whether it's in order or not. And there was a sentiment of principle against multilateralism as a system in which, you know, you negotiate rules that are supposed to be respected by everybody, you know. So and you know, the negotiation can continue until everybody is satisfied, you know. But then, you know, that has to be the starting point for compliance, you know, with the rules. So as I said, you know, perhaps it's too early to say that you know, we are moving in a very clear direction. You know, if I have to look at the past, as I said, I think the 99 reform of the international financial architecture was a missed opportunity. So we might miss this one as well. You know, I don't know. but certainly the severity of the crisis is such, and I detect the desire to sort of to put everything under discussion again, you know, because, you know, things have gone so much wrong that, you know, you cannot simply say, no, we need to repaint the porch, you know, because there is more than that, you know, and so I think Morris also.
Well, we got coming around. Okay, back here, we'll get around.
Marty Weiss with the Congressional Research Service. The IMF quota reform legislation will be coming up to the Hill early next year, and there's been some discussion with some proposals that Congress should reject the proposal and push it back to the drawing table to get something more ambitious in light of the financial crisis and the G20. Curious as to what your, you know, what do you think? What do you think would be the implications of Congress doing that?
Well, if Congress wanted to put more of the things that I've indicated are needed in the financial system, it would be a good thing. You know, I mean, as Daniel Serwer implied before, I'm a keen observer of the United States. I know that some of the IMF legislation, you know, gets bogged down because there are lots of totally unrelated issues. I don't know, milk subsidies, anti-abortion issues, and so forth. So, you know, if that is the case, I would certainly prefer a sort of a speedier, fast-track type of legislation, you know, because I think it would certainly divert the attention to other minor issues. But as I said, I'm sure that the question of the reform will get strong support from the people I mentioned that are part of and very influential part of the economic team. I'm sure that the president will want to sort of decide on his own, but I'm confident that he will get a lot of good advice.
I might just add one thought on that, and I'm looking partly at John Lipsky, who's here at our head table, the first Deputy Managing Director of the fund. As we here in the Institute have thought about the current crisis, what likely come out of it, we're afraid that one lesson a lot of countries are going to draw is that even the large levels of reserves that many had built up in the last 5 years or so were inadequate. The China model looks good, sitting there with $2 trillion, lots of flexibility, lots of means to finance domestic and international possibilities. So we could come out of this crisis into a new mercantilist race where countries are seeking to build even larger war chests of national treasure to protect themselves, to self-insure against the next crisis. And that would imply undervalued currencies, a role for the fund on that front. But one way to deal with the desire for more owned reserves, to use the old term, would be a big allocation of special drawing rights. And so it may be that the old, somewhat antiquated issue of SDRs might again become an important systemic element to help head off a new mercantilist race for buildup of currency reserves. That's one that I think we'll all have to think about coming out of the crisis, but it may go directly to the question of what some new legislation in the Congress addressing the IMF nexus of issues might have to comprehend. John and then Morris.
John Williamson at the Peterson Institute for International Economics. Fabrizio, I think that many people in this audience will be aware that I had an accomplice in trying to sell target zones to the world. He's standing right beside you, as many people here I think know. I do in fact want to talk about this issue. The best way to conceive the present system, I think, is as a series of national countries which are, each of which provides its own anchor by an inflation targeting system or a slight variation thereof in the case of certain countries. And they're linked together by a system of floating exchange rates. And it doesn't seem to me particularly fundamental if one surrounds those links with target zones, or whether one, it seems to me the really fundamental thing is that they ought to be linked by something in the nature of a target rate which is conceived as, it's really not a currency as an investment asset. I think you absolutely hit the nail on the head there in saying this is part of the problem, that instead there are a whole series of different assets of which the currencies are indeed one, and one of the most important, but there's also equity prices and housing prices and the price of oil maybe. So there are a series of asset prices in which one is interested, and which presumably one wants to avoid major bubbles in the future. Some effort is going to be made, I assume, to avoid major bubbles. Now, do you think that, my question really is whether you think that monetary policy ought to be directed at that, including targeting exchange rates, or whether you think that there ought to be some extra instruments introduced for this purpose? And if you think there should be extra instruments, then what those instruments would be. And if you think, on the contrary, that monetary policy ought to do all these things, well, you can't have one instrument hitting 4 targets at the same time.
Sure. Well, thank you, John. No, I certainly didn't want to diminish the role of Fred in the debate on target zone, but I think I had already mentioned him on other occasions. And well, I think your question is very apropos. I think the debate on this has been developed, I think, probably more on at the level of the BIS than any other institution, and perhaps the IMF, John, I think, should do more on this. It's, I think, the evidence that a monetary policy targeted only on domestic price inflation is now almost everybody agrees, that is not enough to avoid the kind of problems I mentioned. I think a lot of people also mentioned the sort of the instrument target issue. How can you have monetary policy performing different targets? I think the contribution that a number of economists at the BIS have developed is that you don't have to adopt a new target for monetary policy, but you have to be more responsive to, oh, here is Ted Truman. Ciao, Ted. You have to be more responsive to the build-up of financial risks in the system, and perhaps you should start leaning in the wind, against the wind of this kind of mounting risks at an early stage, in the monetary policy process. And there have been a number of practical suggestions to do that, which I think central banks have so far refused in a sort of with an ideological attitude, by saying, this would not be consistent with our objective of protecting price stability and so forth. I think we are also working within the ECB to sort of have a reconsideration of this problem, and I think the ECB, which has a more eclectic approach in which we don't look only at inflation targets, but we also look at the monetary aggregates and the market indicators and so forth, is probably closer to making progress in the direction I am advocating than it appears, in public, where sometimes the ECB is characterized as a sort of very rigid in its approach to price stability. I think it is a more eclectic view. Then there is this issue of the so-called land in between. In between monetary stability and financial stability, there is a land which is not covered because financial stability instruments are normally of a regulatory nature and are designed to tackle the instability of an individual intermediary. They are not dealing with systemic instability. So perhaps the idea is that you may develop a macro-prudential approach in which you have sort of, the macroeconomic policy instruments targeted to the objectives that they are sort of traditionally supposed to follow. But you have a sort of a macro-prudential approach also to regulation, looking at, the way, for example, a system reacts to common risks. You can, I mean, the subprime crisis and the crisis we are living in is a typical case in which, you have the risks that have been hitting all intermediaries all over the world, and that's a completely different story, I mean, regulatory instruments are designed to deal with the crisis of one intermediary. One bank fails because they've made mistakes, so you go there, you ask them to increase capital, you change the board of directors and so forth. That's fine. When all banks all over the world, are confronted with systemic risk, you have to develop a new type of approach. So, again, this is an area where a lot of tâtonnement is taking place. We're moving in a very guarded manner, but I think I see that there is a growing consensus towards thinking more directly to this implication between financial stability, monetary stability, and what kind of policy instruments we can deploy to deal with that. Now, as I said, I found always, very attractive the arguments for target zones, but I don't think it, the mood is there. But I think that if we can sort of reintroduce, the elements behind the concept of target zones through this institutional anchor that I've developed, outlined, where all these various elements can be brought to bear, in the advice that the IMF of the Financial Stability Forum can provide, to national policy makers on the monetary policy, the fiscal policy, the regulatory policy. That I think would be a step in the right direction.
Just to keep straight the intellectual history of this issue, Paul Volcker frequently takes credit for having invented the idea of target zones. He doesn't say that too loudly in too many contexts recently, but might begin to do so again. In any event, he does claim parentage for the idea that John and I have worked with for so many years. Morris.
Morris Goldstein, Peterson Institute. Fabrizio, you rightly drew attention to the shadow banking system when discussing this crisis. And as you know, since the crisis started, some elements of that shadow banking system have imploded. Conduits, SIVs. Some other elements have come out of the shadows to become banks so that they could qualify for official assistance. But that still leaves a lot that's out there. And you also commented on, and I think I agree, the feeling that you're going to need an increase in capital going forward. But if you have that increase in capital in the main banking systems, then of course you'll create an incentive for others to be in the shadows again so as not to be subject to that. So I wonder if you'd be willing to share with us a little more on what you see out there as ways for bringing the shadows under somewhat tighter supervision.
Well, thank you, Morris. Very, very interesting question. I think it's, as I said, the debate in the G20 and also on the European side has produced the kind of wording that I quoted earlier about the need to have no actor markets products completely unsupervised. And I think I also recognize that perhaps, you know, Basel II or Basel I actually, because it was perhaps in the changeover between Basel I and Basel II that there was an incentive for a lot of these conduits and unsupervised SIVs to be set up. So I think that eventually there should be the recognition that all sort of large and complex financial intermediaries have a systemic impact irrespective of how they decide to call themselves, you know, and that they should be subject to some form of regulation or oversight, because, you know, I mean, I say this as a central banker of a country that did not allow the development of a shadow banking system. You know, I say this with all sort of, you know, modesty, but that what happened, you know, in the sense that we at the Bank of Italy have always taken under the present regulation, without new instruments, the attitude that it doesn't matter, you know, how many conduits, how many SIVs you set up. You know, we want to have a consolidated view of the activity of any supervised entity, and then we decide, you know, whether, you know, they have sufficient capital to deal with that. You know, so I think that this is the kind of thing that it could have been done, according to my knowledge of what is the authority of supervisor in any country. And in certain countries it was not done because it was, I would say, a political decision or a policy decision to allow that certain type of activities, you know, would enjoy a sort of a more favorable treatment in terms of capital requirements, in terms of the stringency of supervision. It was a decision, you know, and it has to be respected. But, you know, the results of that decision are the ones that we see now. So I think in the end, the principle of consolidation, that, you know, you cannot have, you know, you cannot have central banks, you know, as slow, as bureaucratic as they are, to look at one small element while a lot goes on off balance sheet, offshore, off I don't know what, you know. So I mean, this is a waste of resources, you know. So I think the idea that we have a consolidated view of the activity should prevent, you know, the reemergence of a shadow banking system. And I mean, I don't believe, like, I hear a lot of people that come to see me and say, you know, that's the end of investment banking, you know, there will never be investment banking anymore. It seems a rather silly thing to say, you know, frankly, you know, but the problem is whether you know, it will have to be performed in a way that is de facto left out of any form of regulation, you know. Here, you know, the G20 said as appropriate. I'm not saying that everybody has to be regulated in the same way, but the idea of a non-regulated financial intermediary that you know, can become easily, there is a sort of a fatal attraction to move activity where there is no regulation. You know, so having said that, you know, I'm fully aware that this is a tremendously complicated issue, and it requires all the brain power that I think the international community can put together. But I think it would be a bad thing if at the end of the day we decided that you know, well, after all, you know, this is you know, it's not really necessary, and we can have you know, a system a little bit like in the past.
Other questions? Yeah, Dick.
Dick Smith, State Department. I want to ask about an organization that hasn't been mentioned yet, the OECD, which has a strong, well-respected professional staff and a long history of commenting critically on its member states' economic policies. should we somehow be looking for them to play a stronger role or be given a stronger mandate to identify imbalances that are developing in the system and to flag the kind of bubbles that have given us these problems?
Well, I mean, the OECD is a very important international institution. I think I'm old enough to remember when, and I'm sure Ted Truman also remembers, when the OECD wanted to become an international financial institution, wanted to have money, and I think it was Secretary of State Henry Kissinger at that time who thought that it would be a bad idea to put an oil-related facility in the fund, and so he thought that for a moment that it could be placed in the OECD. I think that project eventually did not materialize, and the oil facility was established in the IMF, which remained the preeminent international financial institution. I think I mean, I don't want to enter into sort of, perhaps there is an excessive number of international bodies and forums and around the world, and I think, everybody should probably be included in what Bob Zerlich, calls a network. I mean, it's probably impossible to find a unique institution where you can fit all the geopolitical realities and so forth. But, there are a lot of expertises and a lot of traditions, in analytical independence. In a way, I would like, that the fund sometimes could be more explicit as the OECD is, because I think if it comes from the IMF, it would be much more heard around the world and would, I think, facilitate also the acceptance of the IMF mission, on a more broad scale, and while the OECD has developed, a reputation of being the institution of a small group of industrial countries, although now, of course, the membership has been expanded, and so I think, there is certainly room for useful collaboration, involving also the OECD. But I don't think that I would sort of rearrange in a more drastic way the present sphere of competence of the various institutions. And I think I've made no secret of my preference for the the IMF.
Last question.
Massimo Russo, former IMF. I have a very quick, simple question, Fabrizio. The United States has the largest quota in the IMF, but is it listening to the IMF more? Would a larger China quota make it possible for the IMF to criticize exchange rate policy in China more?
Well, I think, it's a very smart, short question that requires a long answer. But it's certainly the question of the weight and the quota is a very tricky thing. One way of doing that would be to accept that there is a separation between the voting power in terms of decisions regarding, I don't know, the financial aspects of the fund management, and have some sort of a different voting power based that would have no need, to be supported by actual money, but that would recognize, the different systemic importance, and of the various countries, and but again, at the very beginning, is whether there is acceptance of the rules of an international institution. I remember that John Bolton, who was the American ambassador to the United Nations, he said, it's totally wrong that I don't like international institutions. You know, I'm all for international financial institutions. You know, when I need them, when they are sort of in line with the interests of the United States, I will use them. When they are not, I will not use them. You know, that's simple as that. You know, I'm not against them. Okay, no, that's you know, with all due respect, that's not the way I consider, you know, the issue. So by all means, let's spend as much time as possible to decide on and design the rules of the club, but then, you know, these have to be respected, you know, or you can have a motion for amending them, you know, if you don't like them. But in the meantime, you should respect them. But on the question of China, you know, I think it is obviously a very important systemic issue, and I think you hinted at that. And but you know, I quote in my book, you know, a sentence from the governor of the People's Bank of China, which says, you know, I've heard about the shock therapy, but in most cases it produces shocks with no therapy. Okay, so, you know, we will accept the exchange rate policy that can be accepted by the masses of the People's Republic, you know. So I think, you know, the idea that you revive, you know, the surveillance power of the policies of member countries because of China will make it this impossible to accept to the Chinese authorities. I have no doubt about that. And in fact, they have demonstrated that in the board, and it is as simple as that. You know, so if you want to have a sort of an even-handed, balanced approach to this, you have to do a sort of the good example.
I'd like to close by just saying again what a great pleasure it was today to host so many of our friends from Italy, the ambassador, many of his colleagues who were in our country for a few days. Italy, of course, is playing a crucial role in the global economy as it takes over the chair of the G7 on January 1st. We'll be having a luncheon meeting on February 13 with Giuliano Amato, former Prime Minister, who was in fact Prime Minister in preparing for the last G7 chair of Italy, although there was an election that intervened before the actual G7 took place. But Giuliano did much of the preparation, and he'll be here to talk about that. Mario Draghi is coming to lay out the program of the Financial Stability Forum as soon as we get a precise date. So we look forward to many more sessions of this type. Fabrizio, I want to thank you again today. I recommend everybody buy your book, and we look forward to many more conversations and to host you here frequently.